morning and welcome to the LNG Marketplace Weekly News Flash. Here is the latest news we have selected for you from all over the media. Let's start with some news on market fundamentals. Europe's natural gas glut is growing. Europe's role as destination of last resort for LNG that cannot be sold elsewhere may now be reaching its limits due to the full storage sites and mild winter. How much more LNG can the region's terminals and pipeline networks handle? Unless demand awakens, suppliers may be forced to reduce output, and in an extreme scenario, the reduction or shut-in of U.S. export capacity can happen, as we read on Bloomberg.com. The gas prices in Spain, Europe's major LNG market, has dropped to the lowest level across the continent. Traders point out that it is due to the strong wind that is decreasing demand for gas in power generation. Gas storage that is almost 95% full, and high LNG stocks as the importers are holding off with regasification awaiting higher prices and creating a block in the supply chain. Looking forward, traders forecast a more balanced situation in the first quarter of 2020, as we read on Hellenic Shipping News. The Asian LNG spot prices have fallen as well for a third consecutive week, in response to forecasts of a mild winter, states LNG industry website. Also, spot charter day rates for tri-fuel diesel-electric LNG carriers decreased as the vessel availability increased after a number of carriers that were being used as floating storage units unloaded their cargoes in early November. A contango structure in both European and Asian prices provided an incentive for firms to delay until November the delivery of cargoes loaded in late September or early October, which tightened the shipping market and bolstered charter rates until recently, as we read on Argus Media. The good news is that PetroChina Rudong Terminal received its first cargo of LNG in more than a month after it shut down due to pipeline damage during a storm. The loss of the terminal, which is among China's biggest, contributed to total gas imports dropping, although the decline in China's gas imports growth has been already slowing down since summer, and the outage at Rudong has just made the slowdown even more noticeable, as we read on Finance Yahoo. U.S. LNG export developers welcomed a statement by Chinese officials that Washington and Beijing have agreed to roll tariffs back on one another's goods incrementally as the two sides continue to negotiate a trade deal. However, the statement by China's Ministry of Commerce did not specify a timeline, nor did it provide details on which tariffs would be rolled back first, we read on Hellenic Shipping News. Coming back to Europe, following the expiration of the long-term contracts that underpin the original development of the grain terminal LNG, buyers will have the opportunity to place legally binding bids for the terminal's capacity by 10th of March 2020. Two distinct service types are created: a base user service, which is designed for parties looking to take a significant undertaking in the terminal day packages, entitling parties to berth, unload, store, and send out LNG with no minimum send-out obligation, states Riviera Maritime Media. Pitpoint has opened Europe's first fixed LNG bunkering station for inland vessels in Cologne. The station, co-financed by the European Union, is part of Pitpoint LNG plans to develop a European LNG infrastructure for heavy road and water transport. In the future, it will be possible to have two ships bunkered around the same time, as we read on Gasworld. According to Reuters and Hellenic Shipping News, the energy trader Gunvor has leased the Russian LNG tanker Marshal Vasilevsky from Gazprom for loading the LNG cargo in the United States. The collection of an LNG cargo from the United States by Russian tanker would be potentially awkward for Putin and the Kremlin-controlled gas company Gazprom, as U.S. seaborne LNG is seen as a threat to Gazprom's dominant position in the gas market in Europe. Poland's dominant gas firm, state-run PGNiG, has notified Russia's Gazprom that it will not renew their long-term deal on gas supplies when the agreement expires after 2020. PGNiG said in a statement that its contracted LNG suppliers and acquisitions of gas deposits in the North Sea would guarantee security of supplies after 2020. Lithuania and Ukraine has also reduced pipeline imports from Gazprom, as we read on Reuters. Last but not least, China's Guangdong Energy Group seeks 16 LNG cargoes for delivery over 2020 to 2023, with offers due by late November or early December. You can find more information on that interesting topic on Hellenic Shipping News. That's it for this week. Tune in next week for more news, and until then, thanks for tuning in.